Good afternoon. Welcome to the final panel of today's conference. If I learned anything from growing up with 1990s television, it's that everyone likes a happy ending. And so that's our goal for this panel today. We've been spending the whole day talking about challenges, talking about all the things that hold African SMEs back in terms of regulations, in terms of legal frameworks. I think now it's time to switch perspectives a little bit and to move from analyzing the problems to looking at the solutions, looking at some of the things that are working, looking at some of the good news that are coming out of different parts of the continent. One thing that I find very exciting about this great panel that we have today is that it doesn't only bring together a group of very impressive individuals, but it also really allows us to tackle this question of solutions from a number of different perspectives. We have the perspective of the legal entrepreneur, of the international governance expert, of the institutional investor. Matt also encouraged me, I'm going to say a little bit about our organization and sort of our perspective on these questions of regulatory reform in Africa. And I'm going to use that for a shameless plug. So my name is Tony Weiss. I work for the Center for International Private Enterprise, or CIPE, as we call it. CIPE is, if you want, the love child of two DC institutions with very strong minds of their own. We are, on the one hand, part of the US Chamber of Commerce, and at the same time, we're also a core institute of the National Endowment for Democracy. And so that means that we really work at this intersection where the market meets democratic politics. And we work pretty much around the world, in about a dozen African countries at the moment. And in Africa, work on two pillars. On the one hand, we support African SMEs in setting up corporate compliance structures, especially in the area of anti-corruption work. And at the same time, we work with African SMEs on their political representation in terms of business advocacy, in terms of collective action for getting governance frameworks and regulatory problems solved. And that's really the focus of my work. And, you know, we see, so if you ask me, you know, where do the solutions come from for the regulatory impasses that African SMEs are facing, my response sort of ex officio would be to say, you know, they come from African SMEs and African business and the African business sector working together for political solutions and really defending the interests of their members at a political level. But that is one perspective. I'm very glad that we have a couple of other perspectives on this question and a number of other starting points. I'm not going to go through the biographies of each of our panelists. I'll give them the opportunity to introduce themselves, say a few words about the work that they do and how that work that they do supports African SMEs in different ways. So Odun, let's kick off with you.
Hello, everyone. My name is Odun from Nigeria. I co-founded a legal technology company called DIY Law. And at DIY Law, what we do is to create access to legal services, information, and service providers for Nigerian SMEs. Prior to DIY Law, I also, founded a law firm that works with Nigerian entrepreneurs that provides legal advisory services to Nigerian entrepreneurs and early stage investors. So basically what we do at DIY Law is make it easier for Nigerian SMEs to register their businesses, to access regulatory registrations, their tax filings, their tax registrations. We're using technology to make it easier for them to overcome this regulatory obstacles. As entrepreneurs ourselves, we also understand how this is, what the struggle is, and we're trying to be that buffer between the regulatory agencies and the entrepreneurs. What we also do is provide a lot of information because we know there's a lot of opacity regarding what you're supposed to do. You don't know what registrations you're supposed to do. There's multiplicity of registration. So we step into that gap and provide that solution so that they know that, okay, this is what I need to do to stay compliant, and this is what I need to do to stay formalized as a small business. We think that we also act as a platform for legal services. So if you're looking for a lawyer by practice area, you can find that on our platform. We see ourselves more as a platform than as a law firm. We're not a law firm, we're a platform through which the services and information can be accessed.
Thanks. Hello, my name is Andrea Marušić. I'm currently the global lead for business environment in the World Bank Group. Thank you for having me here. It's been really a pleasure. I hope we can wrap up this like wonderful conference in a good way. So prior to taking this role of global lead, I was based in Nairobi for 3 years, working on business environment and business regulatory issues in sub-Saharan Africa generally. So I brought this experience as well as my prior experience of being in the private sector and going through the pains of, let's say, establishing a small business to this global role. What we do in my team is if I could define it in very simple terms, we help governments design policies and regulations that affect businesses, in particular small businesses, and we help them deliver these regulations in a cost-effective and efficient way. We currently have about, I think, over 100 programs in about 70 countries. Our focus is Africa, and in particular SMEs in Africa. And as a global team, we're also looking at one of our main roles is to try and see what the emerging topics are in the area of firm creation, growth, and informality in particular. So maybe I would also like to bring these thoughts to the table today. Thank you.
Okay, my name is Kaz. You can call me Kaz, Kazuhiro Numasawa from African World Bank. Great to be here. I used to work for the World Bank some time ago, so nice to be back in Washington, D.C. I'm physically now living in Africa on the continent and traveling across countries. Our headquarters, African Bank, based in Abidjan, Ivory Coast, Cote d'Ivoire. So I'm trying to learn also a bit of French as well. As an organization, we, of course, as a member countries, Africa, and non-regional member countries, so in total around 80 countries are members. So as you may know, there are the regional MDBs equivalent. And we invest, so from my perspective is perhaps to supplement a little bit of a regulation, the framework and all the challenge discussions, particularly in the area of access to finance. And I mean, judicial capacity is quite important from investor point of view. We invest around 20 billion in the portfolio, in our loan portfolio. And within that, we have engaged many of sort of SMEs as well as commercial banks across countries, about 20% of the 20 billion. So let's say 4 billion to 5 billion, we have investment portfolio, and which is of course significant amount of the money that we are investing in spite of the risk in our African context. The judicial system is quite important, especially to, let's say, mutually beneficial agreements between borrowers and lenders like us. And we have established a few initiatives, given that there are several challenges on the continent. For example, Andrea mentioned that some reforms and actually happening. And we, as an investor, we try to also support, especially when we want to support those local companies and also financial institutions, because they face a lot of challenges on the ground, and we try to also advocate those challenges to be taken up by the government as well as regulatory authorities. And just a few points, as an organization, we're trying to focus on 5 key areas. Agriculture is called Feed Africa, and industrialization, the industrial Africa, which is including value chain financing for the SMEs, and integrate Africa cross-border sort of transactions. I think in the morning session, Nigeria, the fruit company CEO mentioned about how difficult in terms of cross-border transaction that we are also trying to have those soft issues, cross-border transactions, also physical infrastructure development, and quality of life of the people, which is inclusion of the women, youth, employment, and social issues. And energy, access to energy is fundamental. So these key 5 areas, and SME is cross-cutting, by the way. I mean, SMEs, each one of those key areas, agriculture, energy, etc. So we try to mainstream the SME as sort of a cross-cutting area from investor perspective. Perhaps let me stop here. I will mention a few other elements during the conversations or discussion with you.
Great. I'd like to start us off with a couple of questions to each of you to talk a little bit in more detail about how your work intersects with improving regulatory and legal frameworks for African SMEs. And then I think we can open it up to the floor and have a bigger conversation. So, Udun, I was very excited to find out about DIY law because I could have well used your services a few years ago. Not in Nigeria, but in Ethiopia. I was trying to register a company simultaneously in the UK and in Ethiopia. In the UK, it took me, I think, 15 minutes to get the company registered, and it cost $25. In Ethiopia, we spent over a year trying to get things done, and after the year, things still weren't working the way they were supposed to be. So I think this is a very important, very practical solution that you're offering. If entrepreneurship is really at the core about solving problems, maybe you could spend a little more time on explaining to us what the problem is that you identified and how it affects SMEs on a day-to-day basis and entrepreneurs in particular, and what the solution is that you're proposing.
Okay. So what we discovered was that many entrepreneurs, some of them, there are a group of entrepreneurs that do not want to be formalized. And there's some that want to be formalized but don't know how to go about it, feel it's too expensive, would rather not deal with the regulatory agencies. And it's that gap we feel, is that gap we're feeling. So one thing is to educate on how this can be done, where it can be done, and one thing is to provide that service. So these are the gaps we're filling. We also realize, like, for somewhere in Nigeria, so far we've been focused on online entrepreneurs, but for somewhere like Nigeria, most of the entrepreneurs are offline. So now that we've gotten the act on the online, we're moving gradually to offline entrepreneurs. So what we do is working with entrepreneur organizations, large organizations that work with entrepreneurs, and in collaboration with them, we offer legal clinics, we offer registration, like mobile registration services, so that you can, if you need consultation or you want to get your registration done on the spot, you can do it through us. Beyond providing the solutions through which the solutions that you don't have to leave where you are to get this done, we also take part in some policy advocacy. So like Afyong mentioned in the morning, the Vice President's office in Nigeria is very involved in working on the ease of doing business in Nigeria. So we're quite involved with that. We're working with the community, which is called PEBEC. So we work with PEBEC to provide solutions on how regulatory challenges can be mitigated for entrepreneurs. So one of the things we've done is to suggest, that's still on the table, is to suggest having a clinic, like an education, a training for the civil service that deploy this regulatory issues. Because it's one thing, when you have most of these trainings, what you find out is it's the higher level civil service officers that go for these trainings, and they are not the ones that interface with the entrepreneurs that need the regulatory services. So we've proposed to them to do a training for regulatory officers, for people who work in the civil service. Things as simple as telling the regulatory officers that you can find an answer on Google. they don't know this, you know. They question certain certificates, they question things that you bring from outside that are not known to them locally. So these are some of the solutions, because it's not just about providing the technology innovation solution, there are also the offline solutions. It's not just about the written policies, it's also the execution of these policies, and that's where we want to step in to have these things properly deployed. We're also working with other entrepreneurs, so that together we can actually have like which is a bit of a that's a bit of a difficult thing, because you then don't want to, or rather a bit of a delicate issue. We're trying to form a group of entrepreneurs that can push our own issues separate from the Chamber of Commerce, because we are a bit skeptical about the efficacy of organizations like the Chamber of Commerce. But you then don't want to also build another association that has the same obstacles that you find with these larger groups. What you find with these larger and more established chambers is they're more of government allies and are not actually cooperating to push the solutions that are actually required for the small business owners. So what we're doing is bringing the entrepreneurs together, the small entrepreneurs, to push the solutions.
It's a really fascinating subject, and I really hope that we'll be able to continue talking about this, because, as SITE, we work a lot with private sector organizations of all kinds and shapes, and something that we, increasingly ask ourselves is, are these traditional collective action vehicles like chambers of commerce, like business associations, are they what young entrepreneurs in a place like Nigeria actually look to? I mean, even in the US, you look to Silicon Valley, people have very different ideas of how to do public policy, how to do advocacy for their interests. So very interested to hear your thoughts on how to get these voices and organize them. One final question. You already alluded a little bit to the question of scale by saying, you have your core market, which is internet savvy entrepreneurs, and you're trying to go beyond that. You're based in Lagos. If you drive like 100 miles west, you're in a civil law country. You've left the common law realm, and you're in the francophone world. You drive another 200 miles, and you're back in Ghana in common law territory. What does that say about the scalability of a business here like yours? Are you even looking at expanding beyond Nigeria, or do you just say the fragmentation of the continent in legal terms is just so difficult to overcome?
So it's a double-edged sword. There are definitely there are two different regulatory environments. The francophone countries and the anglophone countries. So what we're looking to do in terms of scaling is more of partnerships. And some of these discussions, we've started having some of these discussions. We're actually talking with a partner organization right now in Cameroon, which is a single country with both English-speaking parts and French-speaking parts. So, and there are different stages of development in that single country. Some of this, in Cameroon, you have some parts of Cameroon that can access some regulatory frameworks online, while some parts of Cameroon have to, you don't have any online technology for that. So what we see, the way you can scale in such an environment is more through collaborations, because they're very, very different types of law, and they're very different types of, it's two different types of regulation, two different types of, how do you say it? The language. Apart from the language obstacle, there's also the regulatory obstacle.
Thanks. Andrea, your perspective is sort of the inverse almost of Odun's, in the sense of, one is the entrepreneur looking for problems on the ground and trying to scale up a business, and you work a lot with governments and look at the top down. And you don't only work on Africa either, you work on things globally. So maybe I could start you out with a big picture. When you look at Africa in the way, all the different African countries and jurisdictions, and the way that they've covered in the past few years, where do you think that they've gained on the rest of the world, and where do you think some of the gaps remain?
So, starting from the global perspective, I would say that what we see in developing countries is you could divide it into several segments when it comes to businesses. And just to start, yes, we do work with governments, but I think it's really a big gap that we don't work directly. We do, in some cases, work directly with the private sector, but not on the development agenda. So we have the IFC, that is our private sector arm, and that invests together with the private sector. We have the World Bank that works with the government on policies. However, there is this gap of working with the private sector on the development agenda. That's a big question mark for us. How do we work with the private sector on the development agenda? Going back to the bigger picture and the segments, so you have this huge informal sector. You have some firms that micro firms that formalize, and then you have a big gap, and then you have large firms. So the big issue is, why are firms not growing and what's happening to them? The big issue is, what do you do with the whole informal sector, and how do you rethink this agenda? Because we have the traditional approach was that if you simplify regulations, if you make the environment accessible, and if you provide certain incentives, firms will rush to formalize. However, this is not happening. We have already quite a sound base of evidence that this just is not the only thing that is important. So the question is, how do you rethink the informality agenda and focus on kind of targeting the right informal firms, which you just mentioned? You know, there are firms that do not want to be formal, they don't want to be entrepreneurs, they just want a job. And then how do you provide more long-term incentives to them, bigger access to demand, access to markets, so that they have an incentive to, so that they do grow once they formalize. On the things that, from our experience, have been done right in the context of Africa, we have seen a lot of reforms. Now, when we kind of present on business environment type of reforms, Africa always stands out as the fastest reforming region amongst all regions. And in particular, when we look at I'm sure you're all well aware of the Doing Business report, the annual Doing Business report, which ranks countries in several indicators of ease of doing business, from starting a business to dealing with construction permits and other, let's say, regulatory procedures. Africa by far has the biggest number of reforms. And that has been, I would say, the easy part. And in some way, we have kind of given, there is this adverse impact as well, which is we have given an easy way out to governments that do not take a systemic approach, but rather a piecemeal and okay, I will do this and everything, you know, all flowers will bloom and SMEs will grow if I do well, for example, in the Doing Business ranking. This is not the case, and I would say that's maybe the part that I would highlight as something that is still missing, is this, let's say, systemic approach to business regulatory reforms. The idea that this is not a one-time reform, but rather that a consistent and, you know, high-level political support is necessary. We heard the example of Nigeria, where this high-level political support now exists. We have the example of Rwanda, that, again, you had extremely systemic and consistent high-level political support. However, what needs to be done is just look beyond these one-time reforms and have a more systemic approach to issues that we think are important for businesses, or at least we heard from businesses are important to them and were mentioned today as well, such as the predictability and transparency of the regulatory environment, access to information. So maybe it's not that important whether you get registered. Okay, your example from Ethiopia of 1 year is obvious, but let's say it's not important if they register in 10 or 30 days or 20 days, but what's important is that they know that it's 20 days. If it's 20 days, that they have access to information and that they have this degree of predictability that reduces the risk of, for investors. That part, I think there is still a lot of space, and we think that the Doing Business, reforming around Doing Business indicators has been a great door opener, but now we really need to go beyond that and make sure that there is or governments need to go beyond that and make sure that there is really a consistent approach and, you know, sustainable approach to business regulatory reforms.
Do you experience something like reform fatigue in some governments? Governments saying we've we've done everything you said we should do.
Yes, yes, and that actually is maybe directly the example I gave of, for example, Rwanda, which did extremely well in the doing business, ease of doing business indicators, consistently over the years reaching the top reformer list. And really they did great in terms of easing the government to business services, maybe in some respects automation, things that really made a difference. However, they what they do sometimes come back with is, okay, that's great, we've done it all, but we still do not see the level of investments that we expect to see. And so that's when you need to dwell in really the beyond just reducing the burden of regulation and cutting steps and days from here and there, and have a more systemic approach and look into what the real causes of the Rwanda not having the level of expected investments are.
Right.
Yeah.
Cass, to you. At SIPE, we speak a lot with African SMEs in a very broad set of contexts, whether it's somewhere in rural Ethiopia, whether it's in Lagos, in different parts of the African continent, in the very different circumstances. And if you ask them what their number one challenge is, the thing that almost always comes up as number one, or if not number one, then number two, is access to finance. We've already talked a little bit this morning about how access to finance is connected to regulatory issues. We talked about it in the first panel. We talked a little bit about it in the fintech panel. But drawing on your experience as an investor making investment decisions, I'd be very curious to hear to what extent you take regulatory and legal risks into the role that these factors play in your investment decisions. And I think it's also worth emphasizing that you're playing this two-level game, where your investment is directly in the financial sector, but then you also, I suppose, you're taking into account, what's happening with those loans afterwards.
Right. Yeah, that's very a good question. Of course, in the morning, there are several panel members also touched upon Axion, the financing lab, and also Brian for the agriculture support. What are the sort of barriers to access the finance, and also what are the relationship with those judicial and the regulatory framework? And basically, if even any of the individual want to put your own money, one thing you consider, ask yourself is that if something goes wrong, can I get it back? And then that process would look like and how long the process will take. So if you're the investor, of course, you will consider, for example, the court system or judicial system will function. If so, to what extent, how fair their decisions are, and what are the procedures required to actually get, for example, the money back, both interest and the principal, or in some of the cases, what are the bankruptcy regime there so that I can liquidate or investor can liquidate to protect their interests. And so there are several parameters that are quite important for us as well. And even to invest in the financial sector, our clients, my clients mostly, private equity funds or commercial banks, microfinance institutions, I basically work together with them. So I will consider my clients as partners. And so I need to understand the sort of challenges of the partners on the ground. And so some of the institutions or the commercial bank, they said, in this subsidiary in a specific country, it may or may not work to get the collateral back, to liquidate. There are certain reasons behind. If, for example, even it's a land, they want to sort of liquidate, there could be sort of limited the secondary market. Or if you have to have another sort of a transfer of the ownership and the one or the other, it may take more time. So it's a legal cost and time. And so there are several issues, even for as an investor to understand to what extent that judicial system allow our partners to actually make their business work, profitable. And there's a consequence in that because when we do the risk analysis or credit analysis, whether this client or potential partner can be sort of qualified for our investment criteria, because we, as the African Bank, we have two windows: public sector window, private sector window. But my work is private sector, and it's important we have. We are not subsidizing at all. Actually, we are pricing according to the market and risk based. And so, as much as our partner can give us the comfort in terms of risk mitigation or in terms of the realities on the ground, to what extent they could, let's say, mitigate those risks in terms of their investments to the SMEs. So this is crucial. And then if you look at the asset quality of the many of the commercial banks in Africa, there's a wide spectrum of the asset quality. So if you go into the, like say, micro, small enterprises, the perception is that this is riskier. And so therefore, usually they should have higher NPLs. But it's not necessarily true, because some of our partners actually do well in terms of their own risk assessment and also kind of managing the dynamism of the SME businesses better than others. So there are certain ways that actually you can mitigate those risks and then get that exposure so that actually you can make a new business model. So for example, in Kenya, our client Equity Bank expanded massively in terms of SME lending, far faster than any other financial institutions in Kenya. But do they have a lot of NPLs? Actually not. Actually, they're quite profitable than other institutions. And so there are certain the models, perhaps this is more perhaps innovation or perhaps the capacity of the institution, how they address certain risks more sort of commercially viable manner. Because the same environment, but the performance of each one of our client partner is quite different, even within the same segment of the SME lending. So this is quite interesting. And to some extent, they also manage well in terms of how to deal with those litigations or kind of court cases, etc., to make it more streamlined, and also have a preventive mechanisms in place so that they don't need to go necessarily to the court cases, but rather sort of mitigate in advance or have more, let's say, liquidable assets in place so that they can actually partially liquidate if something goes wrong. So I think it's important to have sort of universal kind of measures in place so that all the players can benefit. But at the same time, there are certain areas that, depending on the approach and the strategy, they may be able to create that space to help the SMEs better, even in the same environment.
There are still quite a few African countries that have credit caps in place on maximum rates that banks are allowed to charge. From your experience, is that something that restrains SMEs? Because like you say, there's a perception that SMEs can be more high risk than short-term trade lending, for example. Mm-hmm. Does raising or taking off that cap, does that result in banks having greater access, SMEs having better access to finance?
Right. So as you mentioned, there's a bit of interlink between, let's say, the macroeconomic policy versus lending exercises and also the reality on the ground, SME, to what extent they have impact or not. And the commercial investors, usually they have a benchmark. So if you have $1, where you put the $1. So do I put in the SME segment or in the corporate or the agriculture, etc.? So it's risk versus return. And when the government intervene, sort of perhaps political reason or maybe inflation control, but there are several interesting examples in Africa. The central bank or government put the interest cap. For example, in Kenya recently they put the interest cap maximum 4.5%. So it dramatically sort of reduced the lending volume. But of course, the lender is also clever in a way that they try to put different fees, equivalent, try to sort of supplement the reduced interest rate. So let's say they put the front end fees more than before, or they put sort of transaction fees more than before, so that they try to fill the gap between this interest and capital. So, but then, of course, that will take more time, a lot of convincing efforts to the clients, and some of the SMEs may not understand what are the conditions and what are the sort of payment schedule for the fees, because if it's interest rate, it's pretty simple and straightforward. Okay, I will pay monthly, like 5% or so. But then if it's fees, when that trigger or the payment, because that will impact on the cash flow of the SMEs. So one of the countries, for example, Zambia, when they actually removed the interest cap, it dramatically it increased sort of the volume of the SME lending as well as speed of the lending. So there are certain sort of political or kind of macro interventions that have a consequence in terms of access to finance for the SMEs.
Thanks. I'd like to open it up to the floor at this point. I think we have about 20 minutes for Q&A. So if you have questions for the panelists, let us know. But I think this is also an opportunity for us to reflect a little bit about the themes of the day and to really, like we said earlier, take a positive spin on the challenges. And if you saw if there's anything that struck you in today's conversations about how we can turn these challenges into solutions, also, feel free to step up and talk to us. Let's collect 2 or 3 questions if we have 1 and 2.
My name is Hannah Wetters. I'm with the Center for International Private Enterprise. My question is for Odun. I was wondering if you could elaborate a little bit about different ways entrepreneurs are engaging in collective action outside of the chamber system and outside of the kind of traditional structures that we've seen in the past.
My name is Yaya Fanusi with United States of Africa 2017 Project Task Force. One of the recurring theme, and it was also just raised over there few months ago, about scaling of enterprise. It's not going to happen unless you have a political federation in Africa. When I met Donald in 2015 in the Brookings Institution, when he was leaving, I said this to him: for sustainable exponential growth, development to happen in Africa, you have to have in place infrastructure, sufficient and reliable. He said yes, and I gave him the examples, what I consider to be infrastructure. And I said to him, I want you to see the political federation, which we are trying to create, as the super infrastructure. When you have that in place, all the barriers and concerns that you have with scaling, which you all have experiencing, will not happen. You will have sufficient power. You have good roads, good air, freight, etc., etc. There will never be made in Africa, as the OU people are saying. They want to manufacture 95% of what they import now. It's not going to happen unless there is a political federation. The best news is it's going to happen.
Thank you. And I see one more question, and we'll take it back to the panel.
I'll have to wait for the rapture then.
Hi, my name is Afyong. I'm from Nigeria. My question is to Andrea, and similar question I posed earlier. What sort of work is your division in the World Bank, being an institution that works closely with governments in Africa, having them review, regulations and legislations, which sometimes prevent your organizations from either investing or getting involved? Because, you mentioned the ease of business. The ease of business ranking as something that people are already getting fatigued with, and more importantly, is not really yielding more investment. So how do you get governments, if you do any sort of work, to get them to sort of take a deeper look at the regulations and policies in order to unlock this much needed investment?
Andrea, maybe you want to respond directly to that?
Well, it's such a question. Let's. Do you want to take?
No, I
There
think
was
we have
somebody
3
else.
questions, and then we'll start with you in the next round. Thank you.
Should I? Should I go? Oh, okay. Yeah.
Sorry, please go ahead.
Okay. So the same as the previous answer, we do not invest directly. So. We work with governments and have let's say our tools are investment lending to the government directly, so lending that goes to the government budget, or policy development policy loans, or technical assistance. So maybe I would focus on the development policy loan as a good way to achieve certain systemic reforms, including reforms in regulations. I mean, mostly reforms, also regulatory reforms, the type of reforms. So practically, some of the experiences we had in Africa, in, for example, Kenya and Tanzania, is that we were able to affect a lot of positive regulatory changes through, let's say, negotiating these development policy loans with the government. So practically, what happens is we sit with the government and agree on kind of what course of action would be in our particular area in the business environment. These are usually larger interventions that could involve other areas such as energy or infrastructure, which sometimes have also a pillar on private sector development. And what we do is we identify very often also consulting the private sector, and we always make the point when working with our client governments how important it is to consult with the private sector and get the input of the private sector on these measures that we want to implement together with the government. This does not always happen, and I must say that's also one of the challenges, because getting the input from the private sector is not easy at all, especially from small or micro enterprises, which is our theme today, and that's one of our question marks going forward. What could we do better in terms of getting the private sector input on the reforms we implement? And then we agree on a set of actions, and we of course have let's say, analytical work that supports these policy decisions, so we can help the government, let's say, have a more evidence-based approach in these areas, and then these reforms are monitored through these development policy loans over a course of a series of, let's say, a number of years, and then thereafter, we are able to monitor whether there is an impact as well. I can maybe give an example of a recent one, which was on industrial licensing. It was actually a huge intervention in Egypt, where the government had the same approach towards small firm, let's say a small company manufacturing T-shirts, and a huge chemical factory dumping chemicals in the river. So the important thing there was to refocus the government to have a risk-based approach. So what this policy loan provided is that the government is going to enact new legislation in industrial licensing, which took, by the way, in an average of 3 years to get to, whether you're a small or a large company. So it was practically impossible to get licensed for manufacturing. So what was provided in these actions in the policy loan was that the government will enact a new piece of legislation, introducing risk-based approaches, reducing the time to get an industrial license for a small business to a maximum of 7 days, and then paying more attention to those activities that could pose, that are a risk for public goods, such as the environment and health. And this is currently being implemented, and it's one of the cases where I can say will have a huge impact on the business environment, in particular the small companies. So let's say that's one example how we can affect policy making and regulation through our interventions.
Thanks, Andrea. Odun, there was a question about how entrepreneurs could organize for political action or collective action.
So I'll speak from my own experience and what we're doing as a business and what other peers are doing. So I wouldn't. Most of the methods we've used so far, I won't exactly say they're the most sustainable methods, but they have worked. One of them is what aforementioned, there's been a very, very aggressive use of social media in Nigeria. So when you have issues, you find entrepreneurs going online. And the current government, it also depends on the government disposition. The current government is not, tries to mitigate such incidents. So they step in on an individual basis, per business, whoever who's making that noise, and try to find solution to it. And a collective method, what we've done is partner with nonprofit organizations. So we work closely with Faith Foundation, and they're very involved in promoting the ecosystem, making things easier for entrepreneurs. So we work with Faith Foundation. We were involved in the mapping of the ecosystem recently. They have a lot of dialogue between public and private sector, and we were involved in that. We work with entrepreneurs through that, and then we also work with government officials in partnership with them. That's one of the things we've done. In terms of a collective association of small business owners, for the informal sector and the offline businesses, you have some of that. You have things like the National Association of SMEs. But in terms of the online businesses, there's no collective effort yet. And we're a bit skeptical about that collective effort because we've not seen that work to our own benefit, to our own advantage yet. But there's a lot of knowledge sharing. There are forums through which small businesses where tech entrepreneurs exchange experiences and share information. So that's it. That's been it.
Thanks, Odin. I'm going to take the comment on the move towards greater political federation in Africa and spin it into a question for you. Political federation in Africa is a long-term subject, but I'm curious, if we look at it from a slightly different angle, from the angle of regulatory convergence. Do you, when you look at the financial sector in all the different countries where you invest, do you see a move towards greater convergence in terms of regulatory, in terms of financial regulation, and does that make your life as an investor easier, having to deal with fewer different fiefdoms, if you want?
Yeah, it's a very good question, and also a bit of a complexity around there. Given that diversity, as you clearly understand, country by country, you cannot compare like Nigeria versus Kenya or Burkina Faso, the size of the economy, and then sort of diversity within the economy. What are the sectors involved, and what are sort of let's say cycle of the economy is quite different compared to, for example, like let's say some commodity-based countries versus like non-commodity-based countries versus net importer by the net exporter, etc. So it's quite difficult to say. But there's of course, for the financial sector, as you know, that the Basel framework are there, and many of the countries now envisage to adopt the Basel II. And there are some jurisdictions like South Africa or Mauritius trying to do the Basel III. And that has also significant impact in terms of risk appetite. So you have to have a good, careful balance between, especially when we engage with the regulators, especially the central banks. We also advocate that you may not want to have a very aggressive adaptation or kind of a simple copy and paste approach. Rather, you need to really assess your environment, each country environment, and also consult financial institutions, both banking industry as well as non-banking industry, so that you can see what will be the consequence and what will be some of the potential risks that you're changing the regulation, and which segment of the economy may have impact more than others. So there's a bit of a careful steps required. For example, if you put the non-performing loan limit for the financial sector, easiest way is that for many of the lenders to be away from those high-risk industries, and which may not your sort of intention, even though you may want to stabilize that industry as a whole.
Thanks. I think we have time for two more questions, and I know that there was one right there. If anyone else has a question, we'll add it. Sure.
Good afternoon, Chinyere Ban again. And my question is for Odu. When you began your presentation, you mentioned that one of the challenges you have is that some of the market participants you're trying to attract are not online. And it got me thinking about whether the goal will be to bring everyone online and whether you're beginning to form partnerships, not only to reach this, to work with these people, but with the goal of also just bringing them online. Because I feel that in this day and age, we all need to get online.
Okay, can I go ahead?
Please, yeah.
Okay, so
Was there one more question? Sure.
Comment en route to the question. In a way, I'm not exactly responding to the point about political union, but there are so many things going on now pulling economically countries together, whether it's customs unions, trade unions, the fact of the trade facilitation agreement, WTO's trade facilitation agreement, sort of the most significant agreement that people tend not to track. I mean, that in a relatively modest number of years will alter the environment vastly on how trade between African nations particularly takes place. People aren't tracking it. You can also look at the OHADA countries, very imperfect movement to common commercial law in a lot of areas, but a very significant movement. So there's a lot going on. But if we wait for pure political union, we might as well wait for the rapture. So, but there are other things on the way to it. So that's significant. Okay, where am I heading?
I think there was just the one question. Right? Go ahead.
So I think there's a two-pronged approach to this. I don't think it's possible for all businesses to come online. So Nigeria has a high growth of internet penetration, with most of it being mobile. So most people access the internet through their phones. Now, for that crop of people, it's possible to get them to come online to access the services. But because we realize the literacy level is also quite low, there's a need to go meet some of these entrepreneurs offline. So what we do is we're targeting dense commercial areas, and we're talking about like traditional markets in Nigeria to have clinics there. Whoever, if it's possible to, whoever who's interested in coming online will do that. But we also want to be able to offer the services without you necessarily coming online to access the service, because the literacy level, for you to be able to use the internet, for you to be able to use your phone, there has to be a degree of literacy level. I'll give an example. When the banks started going online in Nigeria, most of the Nigerian banks created these wonderful apps, and they didn't see so much adoption. And then they came up with a USSD technology, which doesn't need the internet. It's just using an SMS service to get things done. And you found like a very, very, very high rate of adoption. So that's not necessarily bringing them online, but still using technology to meet them. So solutions like that could work without necessarily bringing these entrepreneurs online.
Thanks, Odun. Before I leave the entire panel off the hook, I'd like to close with one question to all of you, and with a request for short answers of a minute or two. We talked a lot, I think, many of the conversations we had today were about the complexity of getting regulatory and legal reforms underway in Africa, and all the different instances that it involves. But if you had to point to one simple, concrete action that could make a difference and could make life easier for African SMEs, if the audience would have to take one thing home from you, what would that be?
I think for now, what will be a short-term win is re-educating or reforming the civil service in Nigeria, because these are the people who execute this regulation. So I think that's one of the greatest challenges in Nigeria, and the big solution would be to have a more educated and vibrant civil service.
Is there one place where you would start with that?
The registration, the company's registration.
Right.
That's okay. So I will continue. So a very simple thing to do is have really an up-to-date, accessible, transparent business registry. Like that's like a little building block that then you can work with in terms of the business environment in general. Just do that, and have
see
it,
a consensus
have it out there.
Yeah, from my side, after registration, how to access the money to expand the business. So my perhaps suggestion for the regulators and policymakers would be to create independent market-based institutional mechanism so that SMEs can have easier access, less documentation, less complexity, less collateral, less conditions, so that the SME can, within their capacity, can access those finance, but with a market risk-based, so that there's a kind of reward. So if the business goes well, the interest goes lower.
Thanks. That really leaves me with nothing left to say other than thank you. Thank you to Odun, Andrea, and Cass. Thanks very much to the Bingham Center and Joan State for hosting us, and thank you, all of you, for being here and for sticking with us throughout the day. Maybe we can have a round of applause for the panel. And I hope that all of you leave here with some concrete arm-lifting ideas that you can implement in your work. Thanks.
Thank you. Thank you for the panel. Very interesting. Actually, thanks to all of you for attending. I hope you found it was interesting. Certainly lots of new ideas, I think. We didn't get stuck in sort of old and repetitive subjects, which is always a risk in Washington, which is a land of conferences. So thank you for all that. Thank you for your questions. If there any of you here still needs CLE credit, make sure you fill that form that was in your materials and leave it at the table out front. There's reception, so there are things to drink. It's a little cool out, but the view is still pleasant outside. You're welcome to wander out there. Thanks very much to the Bingham Center for all the heavy lifting on this program over many months. And so we look forward to more joint programs in the future. Thanks.
So I won't take long. I mean, it's difficult in some ways and easy at the same time to have the very last closing words. I'm also going to continue on that topic. I really want to thank likewise Joan Stay, of course, for hosting us, and I think that goes on behalf of everybody here. Thank you, of course, to all our speakers, some of whom are unfortunately had to leave a little bit early. Thanks, of course, to all of you, the participants, for all the good questions and your involvement. I also do want to acknowledge the contribution of many other organizations that were not necessarily represented in today's agenda by means of speakers or so forth. And these include the American Bar Association Rule of Law Initiative, which I'd like to thank, of course, SIPE, who's been very helpful, the Aspen Network of Development Entrepreneurs, the Partnership for Transparency Fund, the Good Law Foundation in South Africa, the SME Finance Forum, Poverty Action as well, all of whom have been very helpful in co-organizing in some ways, this conference today. Also, I'd like to thank some colleagues that are not here today, but have been very helpful from the office in London, Clarice, Sandra, Bradley, and others for their great help. And for us at the Bingham Center, I think it's been an extremely interesting day that's gone really fast, by the way, but extremely interesting nonetheless. It's been good to see a lot of contacts happening here between different organizations, a lot of opportunities, I think, to try and really mull over a couple of ideas, which, as I think Tony said, we definitely hope that these will stay with you to some extent, and that you might be able to go home taking some of these ideas forward, perhaps, reflect on some of the challenges, but more importantly on some of the solutions. We at the Bingham Center will continue working on some of these issues. In case it wasn't clear, some of the material for this conference is also on our website, so if you ever need to refer back to it, then by all means, please keep an eye on that one. If you feel like you want to replay some of this thing, some of the conversations that happened today, we will be posting the videos hopefully very soon. That also will be on the website. Anton's presentation earlier is based on a long report. There's been lots of work that's gone into that, and that report will also be going on the website soon. We will also be working a little bit more on the Sustainable Development Goals and the business the role of the business sector in the Sustainable Development Goals. So that will probably lead us to a similar type of conference like this at some point next year in London, to which, of course, if any of you is interested in those kind of topics, then by all means, please let me know. Very lastly, I mean, again, thanks to all of you, and please, by all means, stick around if you can for the drinks. Thank you. Thanks, everyone.
Thank you.